Yeah, Monday. What's up, everybody? Monday morning. Hope everybody's having an amazing day. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. I hope everybody had a great weekend, was able to spend some time with some family, maybe get out, enjoy some nice weather in your part of the country or your part of the world. We're going to do today what we do each and every day, identifying potential breakouts and reversal trades from an educational perspective. So let's go ahead and get rolling here right quick. Real quick announcement. If you guys don't remember, we had talked about on October the 15th is our Traders Summit. It's an all-day event. We're going to have phenomenal guest speakers. We're going to have speakers from Bulls and Bears Radio. We're going to have speakers from barchart.com, from Top Step Trader, from Traders Army, myself, Corey Lane, Justin Krebs. So it's going to be an amazing day, full day. Go to tradersarmy.com/Traders Summit to register. So, all right, let's go ahead and get started. So let me shrink my head here, and let's go. So today, this morning, we're up 21 points in the S&P. Now, I will say last night we looked at this and said, if you wanted to go with a with a gap and go trade, it looked like this was a pretty fair play for a gap and go. It had gapped in the direction of the predominant trend, right? Our predominant trend is up. It had gapped in the direction of our predominant trend. We started to see a little movement, but then what happened? Right? What happened after we got our potential entry here? 1, 2, 3, 4, 5, 6 candles later, even 7 candles later, it had gone really nowhere, and it told you it's probably not going to go anywhere, right? And so, yeah, the next thing that we would look for is for price to kind of, pop up, but we didn't get that, right? There was no follow through on that position. So if you did a set it and forget it and stayed in it all night, you probably got a short stop out on that trade. If you watched it follow the 6 candle rule, then you definitely did. Frame, head didn't shrink. My head did shrink, pal. This is just my forehead. It's just as large as it is. Some people call it a 6 head. It's just a problem I have. So now what are we looking at for today? So what I'm looking at for today, when I go to my 4-hour chart, we definitely have a 4-hour upward trend that didn't fail, right? We thought that it might fail on Friday, but it didn't. We didn't get below this low. And so we also, though, haven't gotten above these highs. And so now we're kind of in no man's land. And I really felt like, okay, last night our gap and go may be what rallies us a bit higher. So when I look up to the left at our areas of supply, this one up here is obviously our most obvious level. Now, I think we traded off this level last week, got a nice little move away from it because it was a confirmation entry. So the fact that we've hit that level twice means that it's that much weaker of a level, and I'm certainly not going to be taking it again. I have to kind of go higher to look for some supply, and in that case, I'm coming way up here to my next area of supply. So my point being is that there's room for price to run higher, but we've been unable to create that really new strong high. So today, to me, is one of those days where you don't have to trade. And if you don't see the right setup, then don't take it, okay? Now, last night after our gap and go trade that just gapped and didn't go, we're really going to have to look for what's our next move. And our next move, I still think, is going to be that next move higher. And that next move higher makes the most sense. It's the most probable setup, but we've just not gotten any of the follow-through yet. So I would wait for a good amount of basing on some sort of a breakout above those Globex highs. Could we be setting up for a slight bull trap with a little bit of supply up above us that would then just pull back if we did take the breakout? Possibly. But is any of this supply any good? Does anybody see any great supply up here that's going to act as a bit of a bear trap? Morning, Mr. Olsey. Yeah, gap and crap. That's kind of what it was. Yeah, wait for better setups. I just don't feel like the setups are there. And by the way, we're going to hear that a lot today. So kind of get used to that. There's just not a lot of great setups inside of this S&P. Looking at the NASDAQ, very similar on the picture from what we talked about last night. Now, we do have a 15-minute level up here, which we put this as a confirmation entry on this level up here, simply because it's in the context of an upward trend, right? Technically, our trend is up. And if you want a clear way to see trend rising, just utilize the zigzag. And the zigzag percent indicator, I really like this, because what it does is it allows you to see those swings, those swing highs and swing lows. And on here on our 4-hour, we definitely have higher swing highs, higher swing lows. We've not put in a lower swing low as of yet, although the zigzag's picking this up as a lower swing low. So you know, but we're definitely still kind of in the middle of that realm. So I'm going to continue to look at bullish areas of quality demand and bearish areas of quality supply, and those are going to be the best ones. In the NASDAQ, I failed to mention that we did have this area, 15-minute chart below, or excuse me, the S&P, this 15-minute level below the gap up. So that's kind of the origin of this move higher. That level does also exist in the NASDAQ, but in the NASDAQ, it's not as clean. It was tested here. It was tested all the way back here. So in the NASDAQ, I think your better level is this hourly wick over wick right here. And I like this level a lot because of the wick over here to the left. So keep that area in mind. That's right. Carl is 100% right on that one. If it doesn't fit your plan, don't force it. Taylor is 100% right on that. That's a great way to put it. Carl's a wise man. All right. So looking at the Russell, well, Nick, the reason I like that wick when I go back to this 15-minute level is because let's talk about what price action occurred. It's giving me that difficult pain there. Hold on one second here. All right, let's talk about the price action that occurred in that wicks area, Nick. So when we think about that wick and what price action occurred, we went all the way up to here, which means that we had a rally all the way up to here, and then we dropped into here. So this is, when you think about it, this is really price starting all the way down here, right? So if you think about it, all the way back to these bullish wicks, you had this move all the way up to here, and then price dropped. So by price getting all the way up to here and then dropping, this acted as resistance, right? The top of this wick was resistance, and it was a turning point where we ran out of willing buyers and there were still some willing sellers. Price then came up, and I had this little wick over wick area. Well, this is a wick over wick area at a prior area of resistance, right? Which gives me a much better opportunity to lean on that going forward, because you're going to have some orders that are placed at that same area simply because it's been a turning point in the past. Does that make sense? And those are what I'm looking for, are some of those areas where I think that we could use what I call groupthink, and the groupthink that we look for could be a big part of it. And that's why I love those wicks. Now, had that wick been the other direction and a long wick down, it would have been a completely different picture. But I like the fact that it was a long wick up. All right. Amit, what settings do you use for zigzag? I primarily will use it on the 4-hour chart, and I use a 0.5%, Amit. So I'm using, if I go to my zigzag, it is set at 0.5. So it's not even a 1% zigzag, which is significantly different. And then I actually, I give it a width of 4 so that it's very, very obvious. And it actually, it pictures the downtrend and the uptrend. I frankly don't know how they calculate that, but it does those in that piece. So, all right. So over to the Russell. So in our Russell position, we have a 15-minute up down below us of demand, origin of this strong move up. We didn't like this one as much last night on the breakout. This was the stronger market on Friday. It didn't have as big of a pullback on Friday. We could have seen a little bit of rotation, if you will, on our markets. And so with a little bit of rotation, let's see if price comes back into this region. We do have a decent overnight level here that was just formed. Right there, 1544 by 1541, if you wanted to try that one on a bit of a pullback into this region. But this is really, if I look at these three markets, it's the one that has been it's the one that reacted the least off of Friday's news. So if I go to a 15-minute chart, we're just looking at 15-minute from Thursday to now on all of these markets. There we go. We're pretty even now on our setups here. That's better. Taking a look at these three markets, the S&P, the NASDAQ, and the Russell, it's clear to see that the Russell is the one that's the strongest, right? From this point Thursday to this same point on the S&P Thursday to the same point on the NASDAQ Thursday, which I think is so. Looking at that, you can see that the NASDAQ has been the weakest, the S&P basically flat. The Russell's actually been a bit bullish. So we're seeing a little bit, was there a bit of an acceptance of risk after the latest market pullback, right? Was there a little bit more of an acceptance of risk after the latest market pullback? Did some big money feel like that was an opportunity to get long on some of those more speculative plays? And that's ultimately, I think, what it looks like in there. Okay? Next, let's look at commodities. So in our commodities position, crude oil, last night we looked at this level in crude and didn't get the turning point at all on it, but our big picture trend was definitely still down, right? Our 4-hour trend is definitely down, but we just got a strong rally overnight in crude. And that strong rally that we got in crude actually took us past this 15-minute level. Now, what did we get just in front of this 15-minute level? What happened just in front of this 15-minute level? Somebody give me the answer while I sip my coffee. All right. Something happened in front of here that we need to keep into account. And it was, the kiss of death. Very good. This is the kiss of death right here. KOD. This is why I'm going to say this again and again until I'm blue in the face, and I don't care who says it. Yes, it's sexy to talk about set it and forget it trading. It's absolutely sexy to talk about, just set it and forget it and walk away. But in all reality, you've got to look at the arrival into the zone. The arrival into the zone will be the most important piece that's going to tell you whether or not this trade is worth taking. And in my mind, this is the kiss of death when it happens before a reversal level. The basing that happens before a breakout is clutch for a good entry. And so I am not – exactly. I agree with that, Dennis. It makes a much better breakout opportunity when you get that basing in here, because that's where price then rallies higher. And I know a lot of traders that they'll look at reversals and see the basing and say, okay, now it's a breakout. Just take it the other way. And in this case, that would have been the right play. Now, I will tell you, when I looked at this morning, it had already come up to this region here. And so, because I get up in the morning about 4:45, set this thing up, and then go exercise and all that, and then I come back and look at the markets. But this was already up through here, and I didn't catch this. But I also am not going to do set and forget it trades in the overnight. Different, however, if I set it up before I go to bed. I'm okay with setting it up before I go to bed and allowing the trade to run. Now, for those of you, Nick and John and some of you that are probably watching from across the pond, that's early morning in your trading day, right? So that's 10 o'clock in the morning, I think, UK time, and that's a really, really good time to take a look and see, does that trade make sense? And so if you've got the ability to look at the arrival into a level, then do so. Right? Now, take a look at the level that we're coming into right now. Even the level we're coming into right now, if I take this trade, my tightest stop would have to be above the leg-in candle. Well, my leg-in candle is this one right here. Technically, on our 15-minute chart, we want our stop to be above that leg-in candle. That's a 1-to-1 reward to risk. Well, what are we doing right there at the 1-to-1 reward to risk? We're basing. 10:30 T break. That's beautiful, John. I love that. We're basing in front of the level. So that takes this one away. It means no good. No thank you. I'm out. As they say in the 90s hip-hop song, we out. We out. Do. All right. All right. I like this area right here. I think this level's a very clean little base rally. before that pivot if we get any sort of a retest. When I look at that on the hourly chart, it actually is just going to make sense to take the whole pivot. I think it's better to take this whole pivot in this instance. Now, our 4-hour trend, when I look at our 4-hour trend, coming all the way back to here, our trend technically still hasn't reversed, right? We haven't put in a new higher swing high, higher swing low, but this could be the new higher swing low, right? So keep an eye on this one. It'd have to be a confirmation entry if you're going to take it, because it's still going to be counter trend. If you wanted to take a basing breakout trade, look for some basing to take a breakout trade as an opportunity to get higher. Gold. Gold is sitting sideways and really just kind of in between some zones and some areas. We've got a breakout level here above 1923, a breakdown level below 1885, and I think that's where you're going to see your best directional trade opportunities, is on those breakouts. As far as my levels of supply or demand in between there, I just don't have anything that's very beautiful, right? I'd say that on a 15-minute chart, we did put in a decent little level here overnight that's worth considering, especially because you've got all of this support back here in the past. All that support, combining it with a little bit of basing in here, that could create a fair price value area. Remember, fair price value areas are not the same as supply and demand zones or areas. Some people think that I'm talking about the same thing when I talk about fair price value areas. I'm not. Fair price value areas are slightly different than zones of demand and supply. They're different than support and resistance. There are some interesting combinations in there. Time of day on this one is not too terrible, we'll see. It's just it's an hour or so after the London Open, and so there's a little bit of basing before I move up, so I'm okay with that trade. I think that's a decent setup. Now, remember the fact, though, and it's got to be in purple. It's a 15-minute level. Remember the fact, though, that it is still in the context of a sideways trend. Okay? Let's see. Nat gas. Remember, we're looking at the X contract. We've got a potential breakout above this level here on the X contract in Nat gas. There's really nothing else to add to this position from Nat gas. Nothing really happened in the overnight. Copper, same thing in copper. We had a potential breakout area up here. I mean, copper just got really wild. Strong move down, strong move up. I think that the next leg is probably for price to continue down. When I go to the 4-hour, I had said that on Thursday, or I think it was Thursday, or whatever day last week, I think it was Thursday, we had talked about the fact that I think there's a chance copper makes it all the way down to this area down in here. I think that's ultimately where our best bet is for price to go. And yes, we got a strong snapback rally on Friday, but it didn't change our, this move down. We had a very strong move down. We didn't put in a new high. So I wouldn't use this as demand because we were unable to create a new high out of this area. If this area had created a new high, then sure, that becomes a really good area of demand. But by being unable to create a new high, I'm actually going to be more tempted to look for short opportunities for a little bit of a rally back up. So on the hourly chart, I don't have anything super clean at the moment. But if I go to the 15-minute, this little level right here in copper, I think is pretty clean. You got 29658 by 29728. 2965 by 2.972. 15-minute chart. All right. Soy, we're still between our areas of demand and supply. It's kind of gone sideways after the really, really big move up we had on Thursday. And same thing with corn, although corn gives me a potential for a breakdown here and then a candle-to-candle entry about 50% of the way into this speed candle retracement area. And then moving over to our bonds and currencies, we went through these last night, but the same thing last night that we talked about and we talked about a couple of days ago. If I look at the dollar, right, looking at the dollar on our 4-hour chart, which is our trend direction, might the dollar break down below here and drop, right? May we get a breakdown below here and drop in the dollar? Absolutely. Might we also see the dollar pop through all of these areas? Absolutely. In reality, what I'm seeing is a little bit of unknown and indecisiveness in our dollar overall. And with that indecisiveness that we're seeing in our dollar overall, we're still above this blue line. I just don't see that we have, if we go to a 15-minute chart, I mean, this is our opening candle here. We've got really no strong strength one way or the other. And anybody who says, well, I know which way the dollar's going to go, I don't want to hear it. Okay? You're just, you're just kind of speculating and guessing. Because what happens if the stimulus bill passes? I mean, there's so many things. And my problem with that is that it's one thing when we've got some sort of a clearly defined trend direction. Now, technically, my uptrend is still here, but that's showing a tremendous amount of weakness, and we're sitting right in an area that was a bit of a breakout, and now it's acting as support. If that breaks and we continue to drop, then we're going to see our currencies rise, right? Little bit of an inverse head and shoulders, Dennis. And so question is this 93.45 area? If this breaks, we see this dollar drop, we're going to see our currencies rise. If this bounces off of here and this rises up, we're going to see our currencies fall. So the point is that right now I don't have a whole heck of a lot in the world of currencies. Okay, let's start with the New Zealand dollar. Jose just asked about it. We've got a potential breakout area here in the New Zealand dollar. I don't know why that's in green. That should be in blue. But once again, I need to be patient and wait to see what the dollar does, right? If the dollar falls off, this breakout area is going to be a very strong trade with nice room to run. But as far as below that with demand areas, I don't have anything super clean as far as demand goes. You've got a decent little 15-minute area right here at 6601 by 6595. All right, next would be the Aussie. So in the Australian dollar on a 1-hour time period, we have a little bit of sideways, nice move up. This was our level we looked at last night. Now, this was not a super clean level by any stretch of the imagination, and we came close to this level by a few ticks, and we were unable to get filled. So normally I would take this and switch it to a confirmation. I'm actually just going to remove the level altogether because we came so close to it, and my 4-hour trend is meh at best, right? And so I'm once again, like I talked about, I'm gonna kind of hold off. Today is a very good day to work on your short game. Okay? Today's a great day to work on your short game. Don't go forcing trades in a day where the market's looking sideways. The euro, very similar picture. Lot of sideways price action. Now, we did wind up getting a little bit of a rally the last few days on some hourly charts, and that does lead to chipping, putting. You know, for me, if I don't have a short game, I'm in trouble. It's a good thing. I'm not sure if Taylor's still on here or not, but he's got good short game. When I think of short, I think of Taylor. All right. I would look in this area here, 1759 by 1754, for a decent little reversal. If price comes back into there, we can get a move away. That's, to me, the best one on here as far as an opportunity goes, but overall, we're still very sideways. Looking at the Canadian dollar, we are still in between our areas of supply and demand. 15-minute level, similar one, but not a great time of the day last night after the market opened up. So I'm going to leave this one be. Breakout on the euro. So you're talking on the 4-hour or the 1-hour chart? You're talking this area right here, Amit? So technically you could get a breakout on there if we get enough quality basing to make that level make sense. My only fear of that is the unknown of the dollar. Right? My only fear is the unknown of the dollar. And so I like taking the reversal on a 15-minute level because it's a smaller area of risk. Because on this right now, if you take it, the tightest your stop could be is way down here. Right? and so, but I've got supply up here, so I don't know that I have enough room to roam if I take that breakout. I'm okay with it. Just move your stop and be very aggressive on your stop, on your profit taking. Great British Pound looks just like the euro with a potential on the breakout on the hourly time period. We did pop above there with those little tweezer tops, just about tweezer tops, not quite perfect tweezer tops, but we came back into that region and we're chopping and basing. So if you wanted to take a short breakout, a little bit of a breakout here, you can. The better one is still above this 1.3, right? Just there above 1.3 is going to be your better breakout. And then Japanese yen, we looked at this one last evening where we gapped down, switch this to a confirmation short, but between our levels. All of our currencies are between areas of supply and demand with nothing overly clean that's going to want me to force a trade in these positions. And so I hate to sound like I'm taking the chicken crap way out, but I don't want to force something when it's not there. And I think that when I look at the markets overall, I'm not going to force a trade if it's not there and not giving it to me. And you know, just the gap and go, having a 6 candle move that gave us a stop out. 6 candles told us to get out at basically break even. 2 candles later, it was a small stop out, but it's not really done anything. Tells me today's a great day to work on the short game, to go walk the dog, whatever it is that you want to do. Don't force a trade when it's not there. There are good levels. But they're going to require patience. And I would say more than patience, they're going to require you to utilize alerts to identify good trade opportunities. So, all right, I'm gonna wrap up a little bit early today. That's all I have for today. If you guys have any questions, as always, shoot us an email. My email address is chuck.fulkerson@tradersarmy.com. I will type it into the chat box for those of you that are here. And then if you have any questions, please let me know. Until everybody, I will talk to you soon. Have a good day. See ya.